I do. I think you have a shift that was already well underway, which was the preference to work out in the home. The only thing that had been lacking was the digital infusion to allow some of these activities to be more prominently done in the home. The pandemic, all it's really done is accelerate the shift and the preference that I think consumers will ultimately have, at least a good majority of them, to do more of the activity in the home because you save time to and from. And for many, it's more of a private activity than a public activity as well. I think there will be some normalization in growth, certainly, that they've guided to post the pandemic, but this is a secular growth story. It's not anything really related to this event other than the acceleration of the shift.
Are there going to be, other catalysts for the stock, whether it's international expansion, whether it's new entrants of some kind in terms of machines or what it may be? What are your expectations beyond their ability to simply continue to increase their installed base?
So they're exiting fiscal 20 with slightly over 1 million people that are on the connected fitness subscriber program. That number is going to go to north of 2 million this coming fiscal year, and we have it going to 7 million by 2025. I think this company, although on a smaller scale, is following a similar trajectory to what Netflix did with media consumption. In terms of the drivers that get us from A to B, or 1 to 7 million subscribers, they're only in 4 countries now. This business will be global over that time period. They have basically 2 SKUs in the market now. That those 2 are becoming 4 here shortly with the new tread and the higher end bike. There will be a refurbished bike in the market. I strongly anticipate that the company will also enter the strength category with hardware as well. So you have the adoption curve, the shift of outside the home to inside the home, geographic expansion, and more products. There's also a scale advantage here that uniquely accrues to a company like Peloton. I like to compare it to Netflix's content advantage in terms of amortizing content on a global scale against a subscriber base that nobody else has. Peloton has the same exact dynamic with the talent that they have producing the content and the ability to amortize that over a global subscriber base over time.
Scott, it's Deirdre West. We also heard from the Equinox CEO this morning on CNBC, and he said that he expects people will want some kind of combination or hybrid, a brick-and-mortar gym plus a connected fitness app to complement that. Do you think that's the case? And does Peloton's wins here come at the expense of these brick-and-mortar gyms? How are they doing in terms of developing their digital strategies?
So just like the development of shopping online and for general merchandise and purchasing vehicles and media consumption, moving from movie theaters to in the home, there's always going to be a place for the physical attraction, in this case, gyms. It's just that the predominant growth is going to come from in-home fitness. A hybrid model, if executed flawlessly, could work quite well. But legacy providers, in those other industries that I mentioned, as well as fitness, tend to shift very slowly. And as they're shifting, the new entrant tends to be significantly ahead of them in terms of where consumers want to be with product and with the offering overall. So, I wish them well. I'm sure that Equinox will have a very positive product in the market, but HBO's continue to do quite well, as well as Netflix has kind of dominated the category. And that's kind of what I see here in the future.